The broadcast is now starting. All attendees are in listen-only mode.
All right. Good afternoon, everyone. Today is Thursday, August 8th, and it's about 1:45 Chicago. I opened up the room early a little bit because before I present, I'd like to go over the disclaimers that I have to talk about. There's a few slides here. So normally, a lot of people will just throw these up and say, hey, take a look at them, and then put them under the blanket. I'll take a few minutes to go over them, tell you what that's all about and why you should be concerned about that. The goal of the session here, and for every Thursday, basically for the new guys, this is going to be a great cheat sheet or a syllabus for you to lean on. So what I'm going to do is I'm going to go over the trade setup that you're going to see in the training room, but I'm going to do it in slow motion. So what Michael's doing, you'll see it, like I said, broken down, slow motion, and that'll give you an opportunity to ask questions. Also, this is more of an eyes wide open approach because you only have a week worth of time in the training room on the free trial. So hopefully I kind of fast forward your education during the trial process. So when you do get an offering from CFRN, you have a better decision-making process and whether you want to pursue that or not. So I'm also featuring the DtPro platform. That is the platform that Michael and Dwayne use, and that's the platform I support. The indicators are available on Ninja. The biggest difference is Ninja is more of a do-it-yourself platform where you kind of take the controls and go at your own speed and do your own thing. Where with the DtPro platform, we do more of the hand-holding. Okay, yes, you're going to do everything on your own. You're going to push your own buttons. But the biggest difference between us and them is, if you do have a problem or if you have a question, it's nice to pick up the phone and be able to call somebody. And the person that's going to answer the phone is going to be me. And I know the setup, I know the platform, and so we can knock out any questions that you have. So it's nice to have that backup. So that is the scoop. The guys that are brand new, you're also going to get to learn. We're going to go over we're going to go into a live setting after we go over the setup. And then I'm going to show you how to get into the market, how to place trades, how to place stop losses, money management, when to get out, all that stuff. Okay, and like I said, we're going to try to do it in slow motion, and I'm going to walk you through the process. Okay. Now, a lot of times we get returning CFRN members, active guys that are in here. That's great. I'm glad you're here too. It gives you an opportunity to ask me questions. The big thing for you guys is I will also go over some of the traps and pitfalls that people fall into as they go through the process. Okay, so over the years, and I think it's almost been 10 years, I've seen. All right, so 1 second, my phone's buzzing, and this is a good time to tell you, look, this is live, and my phones will buzz and ring, so I'll have to put you on hold and hit the mute button. So 1 second. All right, sorry about that. But again, that's funny. I attempted to do a webinar last Thursday, and the phones and the markets were just going absolutely nuts, and the phones were ringing off the hook. So I just canceled the webinar because it was just too busy. And so, there's another phone call. So hold on. Okay. Again, as I was going to say, it's not very busy and the market's not, very volatile for the moment. So hopefully the phone doesn't ring off the hook. But again, for those guys that are returning, that are active CFRN members, you're more than welcome to ask questions. I encourage it. Everybody learns from it. So whatever you bring to the table, hey, everything's fair game. I will talk about it, and for whatever reason, if I don't know the answer, I will get the answer and get back to you. But normally that's not the case. Um, so that's it. We're gonna break it down first. Okay. So first, disclaimers. All right. So again, I could just throw this up there and have you take a look at it and say, all right, make sure you read it before I start. But a few highlights, because this disclaimer really is for those guys that are brand new to our space. Okay. Um, Basically, this is a warning label that says, look, you can lose everything and some in your trading account if you're not using stop losses, if you don't have a trading plan, if you're not engaged in the marketplace, if you're not in tune on what your trading account is doing, you're not in tune with the news, uh, what's going on there. If you don't do those very simple things, this disclaimer is going to hit you right smack dab in the gut. Okay? And the fact that I've been doing this for almost 25 years, I really have seen the good, the bad, and the ugly when it comes to trading. So that's why, and as I said earlier, this is an eyes wide open approach to not only the platform and the methodology, but also, the warning flags, disclaimers, the risk that is associated with trading futures, because we are talking about a leverage market. Okay, so um, that's the intent of the webinar. So we might as well start with this. All right, so one sec. Phone's buzzing. Okay. Yeah, so like I was saying, you know, this is a leverage business. So, if you're not using those basic principles, using the stock, having the trading plan, knowing where the markets is, being engaged in what the market is, this disclaimer is going to hit you right smack dab in the face. And so that's why I'm talking about it. And I've been around for a while, so I don't take it lightly. I'm sorry that phone rang, but let me go over the second slide so we can get moving here. So this basically just outlines my relationship with CFRN, okay? In a nutshell, you're staring at DtPro. That's the platform that I support. If you ultimately go down the CFRN path and you ultimately want to use this platform, I'm the guy that you'll talk to. I'll support it. If you have trouble with it, downloading it, have questions about it, you just contact me, okay? I also provide the execution, the brokerage part of it too. So ultimately, at some point, you're going to have to open up a trading account. You would do that through me, okay? What you see in front of you is the indicator set. It's built inside the platform, okay? If you do it correctly, and I have videos on it and how to install it. It's right here with a few left clicks. You'd have the indicators set, okay? And it's not really hard. In fact, if you after I was just talking to Brian. In fact, if you find that you run into any trouble installing it, just call me and we'll do a one-on-one GoToWebinar, and I'll get you up and running, within one phone call. Okay. So again, we do a lot of hand holding here, and that's if you ask. Okay. If you raise your hand and ask, we'll happy to help support you. Okay. So you just depend on how much support that you want. Okay. So that's a scoop there. So the CFRN is the educator. Okay, as it says here, it's their trading tools, it's their indicator set. Okay, ultimately, if you become a partner, any transfer of funds is going to be between you and them. Okay, anything on their website, their videos, their Thursday night workshops, the Logic 247, those things. If you have any issues with it, you call them directly or reach out to Valerie. Okay. Again, when it becomes the platform and execution and brokerage part of it, you can reach out to me. So there is a line. No, CFRN doesn't work with Daniel's Trading. I don't work for CFRN. There is a line. There's a divider in between the two. And the NFA requires us to have that line. The good thing is, we work well together. And everyone has their little roles, okay? So it's kind of worked out perfectly. In the end, if you find that you can't get a hold of them, or you need Michael or Dwayne to call you, you can contact me. I can send a text to them and say, hey, Brian's looking to call you. Brian's looking for a phone call, or they need help with something. That's fair game too, okay? But I just have to make the mention. Look, it's their indicator set. It's their, they're the educator, and it's their training tools. Okay, so there is a line. Okay, so that's it. That's the disclaimer part I have to talk about. So now that's knocked out of the way. For those guys that are brand new, this is going to be your syllabus for the training room. Okay. So let's start with the time frame. CFRN is always on a 4-tick range chart. So when you're inside the training room, Michael's charts are going to be on a 4-tick range. So if you have DtPro, how do you get there, right? That's the question. If you're, my gut feeling is you're looking at a daily, you might be looking at an hourly. If you're on the Logic 247, you're probably on a 30-minute or a 5-minute, right? The idea is to get to a 4-tick range. Okay, so what you do is in the upper left-hand corner of the chart, find the drop-down box and left click on it, and go down to custom. Okay, box is going to open up, select range bar and make that one look like a 4. Okay, hit OK. Now you're staring at the S&P Mini on a 4-tick range chart. The tip is this R in parentheses here. Yeah, that's let you know, hey, you're on the right time frame. Okay. The first trap that people really fall into is they do the right thing. They come down to the drop-down box, they hit custom, but they select tick bar. Okay, they make the 2 look like a 4, and then all of a sudden the chart looks real sloppy. Okay, if you're staring at this, it's just wrong. Okay, and you know there's no parentheses with an R in it, right? Okay, so make sure you're staring at something smooth and you have an R in parentheses. That'll tell you, hey, you're on the right track. Okay, so again, the time frame is a 4-tick range. Okay, now why that? Well, number one, the height of each candle, whether red or blue, no matter how small or large it looks, it's 4 ticks in the height. So why is that important? When you're in the training room, at some points you're going to hear Michael call out some highs and lows. If the high is 29.27, then the low needs to be 29.26. What he is doing is he's being proactive. He's getting ready to place an order in advance. Okay? So what he is doing this is the dom, or this is the towel we're buying and selling. Okay? If you start hearing him calling out the highs and lows, as I said, he's getting ready to be proactive and place an order. So chances are he is either placing an order to get long above the market or below the market. Okay? So he's going to be entering on a stop if the market goes up, or he'll be entering on a stop if the market breaks down, depending on what the market's doing and if all the rules apply. Okay? So again, he's placing an order in advance. Okay, that's why he's talking about it. Okay? So one advantage of doing that is if the market just falls apart, okay? There's basically, let me take one step back. There's 2 ways you can place an order. Okay? One, the market, all the rules apply, and you go inside the DOM and you left click. You enter the market on a left click on a limit. The other way is the proactive way, as Michael is doing it. He'll place the order underneath the current market price. Okay? That way, if the market does break down, okay, he's going to go with the momentum of the market, and the market will actually stop him in the entry. Okay? So if the market does fall apart, if Bert's up there trying to left click, well, he may not get filled. But Michael, being proactive and selling it on a stop, if the market just falls apart, he might take advantage of the entire move. Okay? So there are some advantages to it, but I'm highlighting that because he will be doing that, and it's a little bit confusing. And the first reaction is basically in the crowd is, hey, how did you get into that trade? And he's doing it because he's being proactive. Okay? He's just getting in on some momentum. Okay? So be prepared. Okay? All right. So the 4-tick range chart. Okay? That's the first order of business. Okay? Now let me switch guns here. Go back to our trade setup. So now that we're on the time frame, now we're going to work on the top portion of the chart here. Okay? So some buzzwords here. Okay? This red and blue line is referred to as the MA1. Okay? The green line is just referred to as the BBC. That is short for bullish bearish cross. Okay? Bullish bearish cross. But what's important about the 2 lines is this. Together, when the MA1 is crossing the BBC, that is step number 1. Okay, that checks this box. So if the MA1 is crossing the BBC, as highlighted here, and the MA1 is red, you should be looking for selling opportunities. If the MA1 is blue, and crossing the BBC. You're looking for bullish opportunities. The one that's highlighted here is a bearish cross. So now your mind is thinking, sell. I'm looking for a selling opportunity. Okay. Now note, I said opportunity. I didn't say get short, get long, get short. Okay. I said opportunity because that leads us, after step one, that leads us into step number two, which is this. The normal thing for the market to do after the cross, because that gets the ball rolling, the normal thing for the market to do is to gravitate or flag or trade to the BBC or that green line. That is the normal thing, and that is what you're looking for the market to do the normal thing, which is pull back to the green line. So not only are you looking for that, but you're also looking for the down close. Okay? You're looking for a close in the direction of the trend. Okay? So this red, we got a red MA1, so then we should be looking for a red candle. What you're going to find out is this, and you're going to hear me highlight this later. When everything is the same color, that stacks all the probabilities in your corner on this trade setup. Okay? So the question is, do you take those other trades or not, or do you just wait for these highest probability setups? They don't come often, but when they do, at least that stacks all the chips in your favor. Okay? So we're looking for not only the touch, but the close in the direction of the trend. This candle highlights that. Okay? Now, a big question that I always get all the time is, well, let's do this. Let's just place an order here and get short. Okay? Well, sometimes what the market will do is just go blast off, okay, and just violate the BBC. So what you're doing is, with this close of this downtrend, you're sacrificing price for action. This is just a clue that, you know what, maybe we're heading down. Maybe it is doing the normal thing. Okay, so that's why we look for the down close. Okay, that's step number two. Okay, when we get to the green line and fail or close in the direction of the trend. Now, you're going to find, and I'm going to talk about this too, sometimes the market has so much bullish or bearish momentum, it will not get to the green line. You notice that here, right? Couldn't get to the green line. But what you're going to learn, and what I'm going to teach you, and we're going to talk about is, while this is happening, as we start flagging toward the green line, we're going to draw a trend line underneath it. Okay? We're going to practice that habit. Because if it does violate the trend line before it gets to the BBC, if some other rules are in play, we're going to take action. Okay? So we're going to prepare you to take those steps in the event we get a curveball along the way. Okay? So again, step one, the cross. Step two, we look for the normal thing. The normal thing is for the market to gravitate toward the green line, and then we look for a close in the direction of the trend. If the MA1 is red, we're looking for a red candle. If the MA1 is blue, then we'd be looking for a green or a blue candle or an up close. Okay? And in the process, as it's gravitating toward the green line, we're going to draw a trend line. All right, so that's the game plan in steps 1 and 2. Now, our eyes gravitate toward the oscillator portion of the chart, what is referred to as the slingshot. Okay? Because here's what's happening. After we get the pullback to the BBC, our eyes are going to gravitate toward the slingshot portion of the chart. Okay? And so here are some buzzwords about the slingshot here, okay? The red and blue line is referred to as a cycle. Really nothing fancy about it, it's just the cycle, okay? The green line is just the green line, okay? What's important is the space that's being created here in the middle between the cycle and the green line. That is the divergence or the separation that Michael is talking about, okay? Basically, the trade setup is all down here, okay? I'm going to show you why. So let me get this pen out. I'm going to break this down a little bit further, and this will help you understand why this is important, okay? The cycle, it's red. What does that suggest? The momentum is bearish, okay? So it's saying, look, I'm looking at the NASDAQ, all right? And then on this time frame, 4-tick range chart, the momentum is bearish. That's denoted by a red line. That's good for the home team, right? Because I just mentioned when everything is the same color, bearish cross, red candle, and now we have a red cycle, everything is the same color, okay? This is saying the momentum is bearish, okay? The green line pulling away like it is here, along with the price action, which is normal, by the way, right? You said, hey, this is the normal thing for the market to do. What this is saying is, look, this little air pocket in this ongoing downtrend, maybe that's just an air pocket in this, just a pop-up in this downtrend. And with this close against the BBC, which is the normal thing, okay, that's just a confirmation that, you know what, maybe we need to get short here, okay? That's why that's there. So when step one is present, okay, our eyes slide up, right? Oh, I'm looking for a shorting opportunity. Step two happens. Oh, I get the down close at the BBC, which was normal, and my eyes gravitate toward the slingshot, and the momentum is bearish, and I have this separation, this green line is pulling away. It's like a slingshot, right? You're pulling back the string away. Okay, that's why it's referred to as a slingshot. The green line's pulling away from, you know, the handle, okay? When all those variables are set in motion, man, there's nothing left to do but to go inside the platform, okay? Nothing left to do other than to pull up the DOM, get rid of all this goofy stuff here, and get short and left click, okay? That's it. There's no other filtering, because here's the deal. When this is present, okay, we got a nice red cycle in the direction of the trend, and this is pulling away. The normal thing for the market to do, the normal thing for this green line to do, is ultimately come down and touch the cycle. That's the normal thing for this to happen at this point. And in doing so, price is going to follow along and make a new pivot low. Okay, it's going to make a new pivot low. And when these two intersect, this is the time where we get the heck out of Dodge. We close the position out. Okay, so why does the trade exist down here in the slingshot? Because here's what we expect to happen. The green line to pull away, close the gap, pull away, close the gap, pull away, close the gap, until, hey, our cycle is turning blue. So that's saying, hey, this market has some bullish momentum, right? And then what we expect now is that the green line, hold on, pen, Wonder Twin Powers, activate the pen. You get pullbacks, okay, and then the green line's pulling away and closing the gap. So in the end, what you end up doing is selling this top, selling this top, selling this top, and then buying this dip, buying this dip. And every time she closes the gap, closes the gap, closes the gap, you're exiting the trade. That's it. So that's why it, you know, it all, you're eyeballing the slingshot one a lot of the times. Okay. Every trade, as highlighted here, has an 8-tick stop attached to it, no matter what. Okay. So what does that mean? If I'm brand new? If you're trading the gold and the crude and you're dead wrong, you're risking $80 a contract. If you're trading the YM, the YM, that's $40. If you're trading the ES or the soybeans, that's closer to $100. Okay, that's if you're dead wrong. Okay. Now, along the way, after you exit or enter the trade, excuse me, there's some money management rules that you'll follow, and I'll go over those as they apply. Okay. So the idea, and you're going to hear Michael talk about it in the morning, is to get the risk off the table right away. Okay, that means get your stop to break even or your entry price. Okay. So that's it. That's the trade setup in a nutshell. Now that's what's happening in the room every morning, and it's just at a faster pace. Okay, but what I just went over is basically what's going on. The one of the biggest thing, and you're going to hear me labor over this in the next hour here, is none of this takes place. None of this takes place unless the market is trending. Okay, if we get a bearish cross, we better be making lower lows. And if we get a bullish cross, the market better be making higher highs. Okay, we need to be trending. Okay, so if you want to write something down on a piece of paper, Bert says number one, the market must be trending. You must be making higher highs or lower lows. That's the first order of business. Okay, so if that's not taking place, we're not pushing any buttons. And if we're not sure if that's taking place, we're not pushing any buttons. It's got to be easy and it's got to be obvious. And if it's not, then we're not going to do anything. Okay, we wait for the easy and obvious, especially if you're a rookie. Okay, so be patient. All right. Sorry, I had to answer that text. So that is the rule set. Okay, so hey, I'm brand new. What is the CFRN thing about? What am I getting into? Basically, is this: you're not going in there to learn the top and the bottom and trade it from point A to point Z. That's not what's happening. What you're learning is to take a piece out of the middle. Okay? And along the way, you're going to be using aggressive risk management. So you're going to have a lot of stop outs. You might have some break even, some losses, break even, some losses. You're going to do a lot of trading. You're going to be scalping. That's what you're signing up for. Okay? That also means that you're going to have to get, you're going to have to use the DOM here. You're going to have to get efficient in buying and selling in this thing. Okay? That's what the demo is for. Okay? So that's what you're signing up for, to scalp the market. Okay? And yes, you'll have to be in front of the screens. Okay? So it's not something you can just put on and walk away. You have to be engaged in what's going on in the marketplace. Okay? That's what you're signing up for. Okay? Yeah, I think that highlights everything. Okay, so that's a setup. Okay? So now the next step is to go inside the platform here and look at it in a real-time basis. Okay? So this setup here, we're going to break down and find it in the market. So I'm going to shut this down. Live account. I'm going into demo mode. How do I know that? It says demo up here, just so you know. Okay? We're in demo mode. So the first order of business, right, is 4-tick range chart. Okay. All right. So now we're on this the time frame. Now my layout is different. I like to I have it set up where all I have to do is click on the chart, click on the price, and then my chart changes in my DOM. Okay. Mike's charts are floating. He's got 4 in a row. Okay. Again, I'm just trying to break this down into its simplest form for the guys that are brand new. Okay. So let's start with the indices. What's the first thing on your piece of paper? Are we trending? Underneath that, okay, what I'd like you to do is write down, get in the habit of hitting this zoom out button. See this green and red magnifying glass? I want you to get in the habit of hitting the zoom out button, okay? Because this is going to help determine whether this market is trending or not. Sometimes when you're looking at Mike's charts, they're blown up pretty good, right? So you're really looking at the market under a microscope, correct? Well, if you hit the zoom out button, okay, this will give you a bigger picture of what's going on. So when I see this, I might see a market that's making higher highs, right? Made a higher high here. It did the normal thing. It pulled back to the BBC. We had the up close, right? We have all the rules here present. Okay, bullish cross, pull back to the BBC with the up close, bullish cycle, right? Separation. But the market went down, right? That's what you would see if it's under a microscope. Okay? 1, 2, 3. Are we trending? This says, yeah, we could be trending. This says, no, we're not. We're sideways. So one of the biggest pitfalls that people fall into, and I talked about this earlier, okay? I was going to go over some of the traps that traders fall into. They get caught in the sideways market and they don't even know it, okay? If you just hit the zoom out button, this will help, okay? It'll help you avoid the trap, all right? And if you're not sure, don't push the button, okay? Wait for another opportunity. It's that simple. Sometimes we get so crazy and involved in the market, and our adrenaline's pumping. We want to get involved. We kind of do some silly things. Okay, so when in doubt, stay out. Okay, so again, this is a market that's trading sideways. So no, I would not take action. Okay, if you're not sure, look at dynamic support side by side. See the red and the green side by side? That's a market that's telling you we're sideways. Okay, so if you're not sure, number one, we don't touch anything, right? But number two, if you're still not sure, stare at the dynamic support and resistance dots and see if they're telling you anything. If they're side by side, don't touch a thing. Okay? All right. So right now, we're standing at parade rest, sitting on our hands, doing nothing in the ES. So let's go to a different market. Let's look at the gold. By the way, I have it set on August gold. In order to roll forward, see this little button here, it says roll forward. Left click, and you'll be in the December contract. Okay? All right. So the first question that's on our chart, or a piece of paper, are we trending? Are we making higher highs? And Bert said, hit the zoom out button. 1, 2. I'd say we're making some higher highs. Okay. Notice how we're stair-stepping up. Okay. Notice how we broke dynamic resistance here. We had a double top here. Okay. That's not trending. And now we're trading above that level. Okay. So we are trending. We are making higher highs. Okay. All right. So we've determined that we have a bullish cross. So our minds are thinking buying opportunity. What's the normal thing for the market to do? The market is to gravitate toward the green line, okay, which it does here, right? Does it here? It does it here, right? Remember, this is resistance, okay? We're trending now. We weren't trending here, we're trending now, okay? So after the fact, it looks pretty, right? You're like, man, that thing really worked. Well, no. In actuality, we're not in the trade back here, okay? We're thinking about pullbacks now because we're trading above resistance. Here's resistance. So the normal thing for the market to do is to gravitate toward the green line. Do we have a blue cycle? That's good for the home team for now, right? Everything's the same color. All right. So We're looking for a pullback to the green line. We're just waiting for it to unfold. So you're on alert status that the gold is possibly a buying opportunity. Okay? So there's nothing to do but just kind of wait. Okay? I'm going to switch guns and go to the crude oil. First thing on your piece of paper, are we trending? Bert said to zoom out. 1, 2, 3. Okay. I see us making some higher highs. Okay. We do have a bullish cross here. That's a MA1 crossing the BBC, and it's blue. Do we have any separation? No. What's normal? We look for the market to gravitate toward the green line in the BBC. Now, as I said back here, sometimes the market has so much bullish or bearish momentum, it can't get to the green line. Okay, this is a good example of that, right? And I said you're going to develop good habits. And the one habit we're going to get involved in is as soon as we get this cross, the next order of business is to engage the trend line. Okay? So after the trend, after the cross, we engage the trend line. The way you do that is, see this little diagonal here? Just left click on it. Notice the blue border on it? Okay? And as soon as you get 2 down closes, in this example, you start drawing. Okay? You start drawing for 2 reasons. Number one, we don't know if it'll get down here and do the normal thing, or the cycle turns color on us. And what does that mean to us? The highest probability setup is when the market, everything's the same color, correct? Blue MA1, blue candle, and a blue cycle. This turned red on us, right? Hold on, someone's beeping me here. All right, so 1 second. Let me place an order for somebody. One sec. Almost done here. Then we'll talk about this. Let me let him know. It's Phil. 1 second. Okay. All right. So again, we get in the habit of drawing the trend line because we don't know if it'll get to the BBC or the cycle turns red on it. If the cycle turns red on you, okay, that's watering down the probabilities. Okay, so write that down. The other thing too is if this turns color on you, the trend line is required. So you might as well get in the habit of drawing the trend line in advance, because if it does turn color on you, you're not fumbling around trying to draw a trend line after the fact, and you possibly miss the trade setup. So if you develop the habit now, as soon as we start gravitating toward that BBC, you start drawing a trend line. Cutting it up further, do we have that separation, the divergence? Yes. What's the normal thing for the market to do? It's for that green line to pull away, as it does here, and ultimately do what? Get into the cycle. And in doing so, the market makes a new pivot high. So there was an opportunity here, okay? It was kind of racing here, so we didn't really get a chance. But that outlined a few things, good examples, okay, right there, okay? So I hope you understand. As soon as you get the cross, you're going to activate your trend line, and you're going to start drawing, okay? And you do that for 2 reasons. You don't know if it'll get here to the green line, or if the cycle turns color on you, that needs to be drawn. And a close above that trend line needs to happen, okay? So here we go again. Normal thing for the market to do is to do what? Pull back to the BBC. Okay, we don't know if it'll get here. Okay, well this time it did. Okay, there is the up close, correct? Okay, here's something I want to point out right away. Number one, as I just said earlier, the reason why we draw the trend line, because we don't know if it'll get back here. As it turns out, it did, right? Pulled back to the BBC and we had the up close. It did the normal thing, okay? And as I mentioned here, a red cycle suggests, number one, it's watering down the probabilities. But here's what I want to point out. Notice this is going down at a 45-degree angle. It may not be symmetrical. It might not be exactly 45-degree angle. But when you are faced with a red cycle and it's going against you like it is, okay, right here, there's no trade, okay? That's a disqualifier. Let me tell Clark to call back. Hey, Clark, let me call you back. I'm on a webinar. Okay, bye. Okay. So again, things are moving fast, so I'm not getting a chance to really tell you. Okay. When the cycle turns color against you and it goes against you at a 45-degree angle, that's a disqualifier. Okay, you're not going to take any action. So let me see if I can't find another example of that, because that was happening too fast. Okay. So let me go to gold, because I know gold is rocking and rolling here. Okay. So the gold, we have a bearish cross here. All agreed? MA1 is red and crossing the BBC. The normal thing for the market to do is to do what? Pull back to the BBC, and in the meantime, we're going to have activate our trend line and draw it. Okay? Do we have divergence? Yep. We have a red cycle, and we have separation. So if we get a down close, which we do, we would go inside the DOM and left click. Okay? Now, the first thing on your sheet of paper should be, are we trending? Bert didn't talk about, are we trending on this market? The reason why I did this is because I wanted to show you how to place an order on the DOM. Okay? If I zoom out, zoom out, zoom out, are we trending now? No. Okay? So I don't want you to do anything but just watch. Okay? This looks like we are. Zoom out, zoom out, zoom out. We are not trending. However, I did it to show you a few things. Number one, that point. But number two, it doesn't surprise me that was stopped out because we're not trending. The second way, what I wanted to also show you is that how to place an order inside the DOM. Okay, and that's what that point was for. There's a couple ways you can do it. You can left click, create a sell ticket, or you can left click in the green, create a buy ticket or to go long. So let's see if this happens again so I can show you in slow motion. Unfortunately, things are popping, so the slow motion of the equation is not being cooperative, so hold on. We'll stay here in the crude, or the gold. Okay, so now we have the bullish cross, right? MA1 is blue, crossing the BBC. You do. Nathaniel's saying, why do you need a trend line if the cycle is red? You don't know. You don't need it. You just get in the habit of drawing it because you don't know if this is going to turn color on you or not. Okay. So we'll see what happens here. Okay, let's see if we get a pullback. Of course, we'll end up trading sideways here. And so be patient here. Let's see if it fires. You know, while that's happened, let's go to a different market. Can you find something else? Hold on. See if we can sink our teeth into something. See if we can actually get this. 1 second. We're not trending there either. All right, I'll keep an eye on the gold. Let's see if she pulls back and we could do something there, okay? Okay, hold on. See if it pulls back. I want to show you how to do this. All right, let's see what happens. We'll go to a different market. Let's go to a currency. Let's go to the euro currency. Okay, this one that's obviously trending. See how we have lower lows? Looks like a slinky dink going down the set of stairs. Okay, this one's an easy and obvious one, right? Okay. So again, after the fact, let me point some out. Maybe this thing will get back to the BBC again. After the cross, we draw the trend line. Okay, we don't know if it'll get to the normal thing or the cycle turns color on us. It does the normal thing, but the cycle is blue. The trend line is required. Okay, do we have separation? Yes, we do. Okay, so you could take action on that trade. Does the normal thing here, pulls back to the BBC, but we don't have a newer low, so no action to be done here. Market does the normal thing, makes a lower low, pulls back to the BBC. We draw a trend line because that's what we're trained to do, and we get it down and close. Not only do we have a down close, but you also get a close below the trend line. What color is the cycle? Blue. But wait a minute. We're talked about if this is against us at a 45-degree angle, that's a disqualifier, and I don't push any buttons. That's correct. This is a disqualifier, okay? And you notice the price action was sideways for a bit, but we actually did go down. And so this is the part of the webinar where you blame Bert for not grabbing the points on this one, because I told you to stay out. But more times than not, this will trade sideways or stop you out. You either start you out at a loss or at break even most of the time. Okay, so again, when this cycle is the same color, when everything's the same color, probabilities are all stacked in your corner. When they start moving against you, okay, it waters down the probability. Okay, if the cycle does move against you at a 45-degree angle like it does here, then you're not taking any action. Okay, because a lot of times it ends up being sideways to possibly against you. Okay. All right, so let's move these trend lines. Gold is trying to get back to do the normal thing. But again, we aren't trending. We're sideways, right? We got this high here, we got this high here, and we got dynamic resistance printing. So it's telling you nothing's happening. All right, let's go back to the S&P. Nothing's happening here. We're sideways, so we're just expanding the sideways action. Okay, that's something you don't want to get caught in. So let's go to the British pound. Sideways action here, dynamic support, and resistance, side by side. Swiss franc, side by side. Canadian, sideways action. Okay. The Australian dollar, in the middle, no action. Natural gas. Okay. Nothing's going on here either. A lot of sideways action. Okay. Crude oil. Okay. Again, there was the normal thing. close the uptrend, but that was the red line or the cycle against you at a 45-degree angle. Even though it went up, there's no way I would have pushed any buttons with that. Look, staring at that thing. Okay. So for the moment, we have a lot of things that are just trading sideways. Okay. I went to the mini Dow, the same thing. Okay, we're just back and forth, back and forth. Okay. So let me do this. Okay. I'm going to get into the gold market just to show you how to get in. There's two ways you can get into the market. You can left click and place a limit order. Okay. Or you can be proactive, as Michael does, and you can right click, but you're going to right click above the marketplace. Okay. There's two ways. But what's cool about this, good question, Brian. Okay. What's cool about this is you can set a bracket order. Notice when I hit that Tinker Toy triangle, okay, the bottom of the DOM opens up. If you select sell stop and buy stop, and you set the factor to 8, as I did here, it's automatically going to put that 8 tick stop attached to it. So with one click of a button, not only can you get into the market, it'll also place your stop, and that's where it's at. All right. So one of the money management rules is if the market moves 4 ticks in your favor, you move the stop to break even. Okay. And the way you do that, all you have to do is left click over the one, drag it, and release it. Drag it and release it. I entered the market here at 518.90 and I put the stop in at 515.19.20. Okay, it's that simple. Okay. So Brian's question is how far do I zoom out to look for trends? Okay, good question. I would say 1, 2, 3, 4, maybe even 3 or 4 clicks. Okay. I don't want you looking at this. Okay. 1, 2, 3. I want you to see some real estate over here. Okay. So the gold is pulling back again. Let's draw the trend line together. Okay. So I engage the trend line by left clicking here, finding the top, left clicking, and dragging the line down. Okay. So with an up close, the cycle is blue, and we have space, right? See, the cycle is blue. It's all the same color. So if we get an up close, okay, everything qualifies. Don't have a blue candle yet. So this is how Mike becomes proactive. If the low is 15.1860, if you add 4 to that, okay, that's 15.19, right? The low now is 15.1850, okay? If you just add 5 to it, whatever the high or low is, just add 5. That's the number you click on. Okay, that's the magic equation. Just add 5. All right. So here we go to 15.19. That's what just happened. We are long. Okay. We're long the gold, and here's the stop loss. Right. So it moves 4 ticks in our favor. As it did, we move the stop, break even. Now we have no risk on the table. Okay. And it's going up. Let's move it up. The cycle is turning red. Okay. Look at that. We're going to exit at market and cancel. We're going to get out right here at the market. Okay. And we did that at 15.20.40. Okay. So we did it right there. So we got in here and we got out there. So why did we do that? Number one, are we trending? Yes, we made some higher highs. So we can check that off one of the boxes. Number two, okay, the market was doing the normal thing, which was pull back to the BBC. We engaged the trend line and we drew it. We had the up close and we had bullish divergence. That line, the green line, was pulling away from the cycle. Okay, so what we ended up doing, we ended up being proactive like Michael and putting an order in at 15.19. Our entry was right on the close of this candle. Okay. Now, when the market went up 4 ticks in our favor, okay, we moved to stop to break even or our entry. Our entry was right here. Okay. And the reason we got out of it right when we did is because a normal thing for the market or the green line to do is to do what? Get into the cycle, right? As it did here. What's supposed to happen with that green line? It's supposed to pull away. And what's supposed to happen? Price is supposed to come down with it. So that's why we closed it out there. Okay, does that make sense? That's why we got rid of it here, because green line is supposed to get into the cycle and do this. Okay? And that's what's happening right now. That's why we did that. Okay? So that's a scoop. I have to cut off the webinar early, a few minutes early, because I have a meeting to hop into. But I hope this, again, the guys that are brand new, this gives you something, you know, sink your teeth in a little bit, okay? This has been recorded. There's my alarm to go into my meeting. This has been recorded. I will put it out on YouTube again. It takes usually 24 hours, okay? And then we can go over the recording, okay? You can watch it as many times as you want, okay? Yeah, I'm out of the trade. That's why you don't see it. So it should show up here. Trading. Yeah, something like this. It'll be right in here. This is a demo account. That doesn't even matter. But it'll be there. You can have this showing or not showing. Mike doesn't have his showing. All right? So that's it. I'm going to wrap it up. Again, if you have questions, you can call me or email me. All right? And then we're going to do this every Thursday. Okay? See you in the morning.